So we are the DC Day Swing Traders Group. We're a meetup group. We have 2,035 members nationwide. And tonight we have a presentation from William White. And Bill, if you want to give us your background and then go into your presentation, we're honored to have you again.
Hi, I'm William White. So I've been trading for close to 50 years. I want to touch on some of the things that people talked about. So I day trade, but that's kind of gone out the window now that I'm sitting in the fort all day long. I swing trade and I do long-term investments. So one of the things that somebody talked about from a long-term perspective is crypto and Bitcoin. So I got both of my sons into that when it was about 700. I couldn't trade it because it was trading on a Russian stock exchange. But my older guy ran an algorithm, if you will, on Bitcoin with its limited blockchains. So as each country changes their foreign currency and they all go crypto, what's going to happen to Bitcoin when it finally exhausts all of its instances, if you will? He predicted it's going to 2.4 million. Now, I had a theory it was going to go to 150,000, but I didn't think it would be this summer. And now I'm almost convinced that it will be. So that's my little spiel on Bitcoin. Somebody also mentioned, I think, screeners or utilities that'll scan the market for them. Maybe they said scanner. So this utility called FINVIZ is pretty dynamic. And what I found it doing early, which I started chasing even before I met Robert, is it does this incredible gap analysis, especially with the pre-trades, gap downs, gap ups. And if you're going to form a watch list, like if you sit in Robert's war room in the morning and he invites anybody who wants to come in, he used to charge, but now he opened it up to the public. So it's invaluable if you have the availability between, say, like 9:30 and 10, you can watch each and every one of his trades. The phenomenal thing is he's not trading a whole lot of money. And the returns he gets is just mind-boggling. So if he was seriously trading serious six digits, 20, 30,000 a day. Okay, so that's it with the stock screener. That was finviz.com. Someone mentioned momentum trades, and I too am flirting with an algorithm with AI that is momentum based. And I look for certain indicators to be at play. Most importantly, with a day trade for momentum is volume. So I'm looking at entry points, and I like to look for market corrections. So if the market's green and say one of the index funds goes up and then quickly goes down, and yet the market's still green, I look for the bottom of that V. I know that was up like 4 to 10% in pre-market. It shot out of the gate, wanted to go up, and quickly went down, which is the big money that's playing with us. And at the bottom, and then consecutively after that, it'll go right back up to the point where it started to fall down, kind of like the market has done after this tariff scare. So that's my take on momentum trades. Another person mentioned MACDs as a strong indicator. What I learned with MACD is that it's a laggard. So it becomes an important indicator when you're following something as to when a good entry point is. But it's off generally for 3 to 5 days until it truly triggers that entry point. The stronger indicator for me for real time is something called Williams percentage R. And I have been trading that puppy for 4 decades. Day trades, swing trades, long term. Williams percentage R. Now, somebody also mentioned Tex, one of the last speakers that introduced themselves. So this is a good precursor to get into a graph that I wanted to share to lead off this Trader's Delight section. So Ethan, if you can you pop SOXL and show me a 30-day candlestick graph of XOXL?
What's with the gap up there?
Because I think they gap because you've got buying pressure pre-market, and then I don't know what this I don't know what this was. This was probably the 9th or so. This was something on Friday. It must have been like some kind of a tariff or some agreement or some kind of news. So when it opened up on Monday, I think everything shot up. That was, I think that was last week on Monday. I can't remember what it was, but it was some news. It was some news-driven thing.
Yeah, if market closes and when it opens, it's not at the same price because other people can still trade, big money can still trade while the market closes, it will leave a gap. By the way, this William percentage R is also on TradingView. I'm looking at it. So
yeah, if I do the extended hours, you can see on the 12th. So it actually opened up on Sunday, whatever the Monday it opened up, gap up as soon as it opened for trading, like at 4 in the morning.
Functionally, was that the day that United Arab Emirates was going to invest $1 billion?
Yeah, you know what? I think you're right. I think that might have been the UAE thing. So all the semiconductors shot up.
Right.
We can see if I look at NVIDIA, if you see the same thing, then I'm pretty sure that's what that was. Yeah, you can see NVIDIA gapped up from that Friday, which was the 9th, and closed at 4 o'clock. 4 o'clock on Friday, and then it gapped up to like 121. It's from 115, 116. Is this a chart you wanted, Bill, or something like that?
Well, so what I was looking for primarily, and only the Williams percentage R is showing it clearly. So if you look at the bottom of each upsurge, you'll see that Williams percentage R is seriously oversold. The subsequent long-bodied candles that follow, that are preceding each of the upsurge, is strong momentum indicators of this thing wanting to go higher, higher, and higher. Probably most importantly with the techs is they have been so beat up. And when Trump came in with the tariff things, the acceleration downward is even more pronounced. So April 22nd, if you were to get in, if you were holding the like a long-term strategy, which I know you're doing, John, you could have nailed easily 50% in the last 3 to 4 weeks. I don't know, John, if you're still holding what you said you were holding back in February. But
I am, yeah, I'm holding everything that I was holding. I didn't do anything.
and you must have taken a 40 to 50% down surge, knowing that it's going to bounce right back. Most people with panic sells, they'll sell into the down surge, but they would have already lost 20 to 30%. And then they take their money off the table and they don't get the rebound until after the fact. There was one day recently where the market had the biggest one day.
Yeah, like the one day, like the biggest one day surge. I think that was
In
that
20
was,
years or something.
yeah, like in history. I think that
The,
was
the argument was that if you're all in and all out, which I'd love to be, and you miss that one day event, and you miss the one day events over, say, the last decade, you would have significantly reduced your yearly return to like 3 to 10%, when the market every year wants to be up 20%.
Yeah, I mean, I'm holding all my stuff, but fortunately, none of my position was not ever I was down as much as 10% because I also do a lot of portfolio analytics. So I've got a lot of utilities and things like that that was kind of offsetting. It was not as big a drag as like the triple, because the triple Qs went down a lot, but and then of course the semiconductors. I did get out of the semiconductors. I still hold the triple Qs and the.
You just popped, or you had been showing the SPY.
Yeah, so the SPY was, yeah, the SPY. I was looking at the SPY because you're talking about this was the April 4th when
you
it had the
look,
biggest one-day rise, right?
so here's a technical analysis feature, if you will, because somebody asked, they're trying to learn technicals. So the candle on April 21st for this SPY is what's called a long lower shadow candlestick. And when that candle shows that depiction, it means throughout the day, it wanted to be a full body candlestick. So it was showing probably, no, the one to the right, the red
Yeah,
one.
I know. Yeah,
with,
this one. Yeah,
yeah, with the legs. So that candle, what's saying is, during the course of the day, there was a lot of trades for it to go to its high and a lot of trades to go to its low, where the lower level is. What happens at the end of the day is it significantly closes with upward momentum. And what that candle depiction says to me is, I mean, I used to make a lot of money. I'd come in at like 3:45 and bet that the very next day this thing would be up, because all the momentum was saying go, go, go. And if you look at the second entry point, well, there's actually 3 long-legged candlesticks. There's one on April 30th, right before May, and there's another one on, I think, May 18th. Those puppies are telling you what the big money's doing, because the big money is the driver behind what the market's doing. It's not the little investor. It's almost like people who pay taxes. The rich pay 95% of the taxes. You and I pay the other 5%. So the big money is driving the stock market, not the little guy. And then I'll end with one more thing, because I got to break off, folks. So, John, if you can bring up FSAGX.
But say that again.
S is in Sam, A as in Alfred, G as in George, and X as in X-ray. And then show me a year-to-date graph of that puppy. Okay, so I briefed this thing in, I think it was the first, second, third week of February. And the 18th, it was sitting maybe 29, almost $30. So at what one point, show me what I was looking for.
You're doing your Fidelity Select strategy here?
Right, because I was trying to show the group,
Yeah.
bought this thing, where would you be if you had held on to it in December? But when I trade, I put trailing stop losses into it. So each of these down surge, I sell into upsurges and I sell into down surges. I don't want it to go either way. My targets are so tight. So once this thing starts going down and it eclipses 3%, I'm out. And then I'm looking for my next entry point. And that's even with a strong short-term long investment, because this thing is an 11-month investment. And so that's really what I wanted to show you at this point. There was a better picture. I mean, when it was sitting at 37 these last two times, the numbers were a lot more stronger because you were 20 to 25% off of where you were in February, which is significant when you're dealing with 6 and 7 digits. 20 to 25% in 3 months is not a bad return.
Bill, I have a question. Are you do you trade these? I thought the Fidelity Select was you buy that in February or end of January and you hold it until December. Is that correct, or did I misunderstand that?
No, so I've always had a Fidelity account, and these things used to be very restrictive as to who they would let in, and then they would restrict your trading action after you were a part of it. You couldn't come in and day trade this thing, but you also couldn't come in if you had less than 25,000. They were kind of very selective who they would let purchase these select funds. But then they since lifted that almost at a little bit before they went to 0 transaction fees. And so when they lifted it, now you can come in with anything you want. We were talking in the beginning about coming in with $200 or $300. You can do that here. You don't have to come in with a 25,000 or 2,500 minimum. And I think that's all I have. Thank you.
Thank you, Bill, and get plenty of rest. And we really appreciate you doing this.